Well, hello, traders and investors. I'm LA Little, and this is your daily NeoTA wrap. We take a look at these markets, and we're doing it from a neoclassical perspective, and that means each day we look at these markets, ask ourselves what happened today, and what does it tell us about the coming ones. We have a show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time, archived on YouTube and the Son of a channel, LA Little. And if you want to subscribe, just reach up in the right-hand corner and do so. Anytime content's pushed, you'll get a notification. As long as it's not private, private is for members only. Sometimes I publish that after the fact. If you want to be a member, you just hit the Get Started button. You come over, you take a look at what we do. And for the rates that we offer in terms of cost, I don't think you can beat these kinds of rates. You know, for as little as $15 a month, you can get all of the things that we offer here at TA Today. All these packages, unlimited access on all of them. And you can't beat the deal. If you're a retirement guy and you want to just manage your portfolio, be in the market when it's strong, be out when it's not, retirement package advisory service for $10 a month. So prices can't be beat, and the things that we do here at TA Today also can't be beat. I was looking at one of the things we've done here underneath the testimonials. We had a member that was running into some hardships. He missed his cutoff date. We refunded him in full, even though he had already paid and really was obligated to another year. You can read the whole exchange here if you want. It's just what we do at TA Today. We try to treat everybody like a real person. He even commented here that it was unheard of for someone to call him, such as me. And I remember we actually had a conversation when he first joined. And I was trying to ask him what was going on. I was trying to get feedback and answer any questions he had. If you want to participate, just come over, hit the Get Started button, take a spin, see what we do. I think you'll be reasonably satisfied. As far as the markets, wasn't much satisfaction there today. They were up pretty big, up over 1%. By the end of the day, they closed down near break even. You had about a 0.5% gain. Now that outperformance in the NASDAQ and the NDX, and even in the Russell, two things driving it. You had the biotechs in the NASDAQ, NDX. You also had the stocks. Both of those were fairly strong today. In the Russell, it was the small cap banks, regional banks. In the S&P 500, we actually ended up flat. And if you look at the S&P ended up flat. It was up over 1%. That flatness was a result of everything going down except for the financials. We'll dig into that a little bit more as we get going here. Let's take a look at the S&P to start with. And so if we pop over there on the S&P, it ends up being a doji. It was down. It tested this swing point low. So let's draw these things in here so we can see them. So you had this swing point low being tested, right? So it goes into it, gets under it, back over it, holds. If you look at your volume on that bar, volume there running at about 37.9, what do you do today? 41. So you're doing a little bit more volume into it, yet it holds. The other bar you were testing into was over here, volume over there running at 38. So again, testing with more volume. Finally, this swing point low, you're trying to come into the top of it, and that one does 34. Again, 41 into it. So all the swing point lows, you're hitting them with more volume. What did you not hit with more volume? This big quad witching bar over here, March 18th. The numbers there are 65. The low on it's 2041. You get underneath it, you hold over it, you close over it. This, just looking on the face of it, says, hey, you could have gotten your test today and this may bounce. It may hold this ledge. That's given where it ended today. So you got the bounce, allowed it to hold. That says it can bounce higher. Doesn't mean it will, but says that it can. If we look at the NDX now, the NDX pops into this low, this kind of low ledge here. NDX is coming back into this big bar at this particular point in time. Volume over there is about 20.8. You're doing 19.3. You don't have the volume. You flip around and you hold. Right? You get under, you get back over. You have about the same volume. So no real difference there. Again, this one's kind of a wash. If we look at the NASDAQ composite, the broader market, you got the same thing. You got a ledge down here. It's trying to hold into it. The two big bars it's coming into is over here. It's 19 and 20, and you're doing about the same, 19 into it. Finally, the Russell. The Russell is already underneath its swing point high. and it pops into it, can't stay into the swing point high, and actually did, I believe, test lower today. Let me see, 1904, well, 1994 trades at 93, and volume's almost the same. So Russell's a toss-up too. So the only good read is the S&P, and the S&P says that you can try and bounce. If I look overseas, the real issue overseas is going to be in the Asian markets and in the emerging markets. And if we look at the emerging markets, here we have a breakdown starting to occur here, volume starting to escalate. The volume on the swing point low is 996. You do 914. The low today was 3201, and over there it was 3220, and so that 3220 mark, so essentially we get under it and we stay under it, right? The close is 3219, the close there was 3220, so you're under it, the low is 3220, so you're under it by a penny. Volume's a little bit lighter, hit it with pretty good volume. If it stays under it for another bar, then this thing can start to break back down. If you pull this over and look at it on a little bit longer time frame, right, that breakdown could take it all the way back into this bar at least. That's 31.5, or potentially down to the swing point low again, which is at 30. So you're starting to get the rollover. Just another bar or two, and I suspect that roll is going to continue. That's the emerging markets, and I think that's where the danger spot is, and that's because of the Fed. Fed comes out with the minutes today. The minutes is what turned this market. That's because the indications were that, yes, in fact, they could raise rates in June. So how many times are we going to see it, right? As soon as you see some potential of raising rates, then you see this market try to sell down. Look at the dollar. Dollar, of course, jumps on that news. If we look at it, big spike up. Remember, we've talked about the dollar quite a bit. We thought that multiple swing point breakdown was going to cause a major follow-through to the downside, and then we had a member tell us that in fact the break really didn't take place on the index itself. I went and looked at it, and we did that on the show one night, and in fact it hadn't. And then now we got the big push up. Today volume comes into it, you get over swing point highs, and if you look at this on the weekly, right, all you did was expand the range just a little bit. Pull it over and look at it on the monthly, you can see that. So the range expands, but the range holds, and the range I'm talking about, of course, is this area up here. And so you hold here, you hold down there, right? You just got a range, and this thing's trading in a range, and it's still in the bottom half. We'll see if it gets back over this area, and then of course these highs here after that. So dollar trading in a range, dollar starting to work its way higher again, probably will continue now for the most part into the Fed meeting. That's another 3-4 weeks away, and that's going to continue to put pressure on things that are dollar dependent. Things like silver and gold, and in particular gold stocks, which have run up way too much. So here's silver pulling back. It's to the gap, comes into this low 1592, gets underneath it, just closes back over it. It's going to be key that it holds that level. If not, it's going to close the gap. And if you look at gold, you got the same sort of thing, not nearly as weak, but you have the same sort of thing on it. Comes back into this big bar. Pull it on the weekly so you can see it better. The big bar here, spike up 120.84. Today you close back into that bar. That says you can come all the way back down to this 115 area, maybe even lower. Finally, if you look at the gold stocks, now the gold stocks have totally outran gold on the way up. Look at the volume come out of these today. These have finally met their maker, and they're going to come back down and eventually test back into these swing point highs probably. So you've got some major turns in the commodity, or anything that was commodity based, and that's going to be under pressure as long as the dollar wants to rise, and that looks to be what's happening. If you go into the sectors, you're going to see the same thing. We talked about it last night. We looked at the XLB, for example. Today the volume starts to come out of it. If you look at the XLE, oil was down a little bit today, nothing big, but the XLE, the volume starting to come out of it. If you look at the durables, right, the safety sectors, remember last night we talked about these, not a place you want to be. Gets sold off again today, volume continues to come out of them. And if you look at the utilities, you got the same thing, right? Utilities, volume coming out of the utilities as they come back down. These have been on big runs. They're going to come back into their swing point highs finally. And so if you're in these, you're in the wrong place at this particular point in time. One of the big sectors that have held this market up all along was the discretionary, the consumer discretionary. Look at the volume coming out of this today. As this one starts to roll, right, that's going to put pressure on all those names, all the consumer names that have been such a big part of it, and it's already starting that roll. If we look at it on a weekly, it doesn't look quite as bad yet. If this breaks this area it's in right now, it's on the ledge, right, gets back into this high, then you're going to see it try to work its way back down again. So the discretionary looks good. What looked good today? Financials. Why? Well, because you're going to get short-term rates going up, which is going to help their bottom line. Big volume comes into them. Financials shoot up. That's off these retest and regens to the north, right off the bullish retest regens. Big spike up in volume. That's going to try and push it higher. Now, I only need to remind you that these also look the same way back here in December when it was rate hike talk. Actually the rate hike took place. Once it did, look at how they sold off. So I don't know if you want to get too excited about these, but right now they look like the one place you actually can be for a little bit longer. I did talk at the top of the show, the semiconductors were looking pretty good today. They got a nice little push up. And the other one that's getting a pretty good bounce is the biotech. If you look at the NDX, biotech index, the biotech, the stocks and the big three, Apple, Google, and Microsoft, are most of that index. And so if you get strength in those 2 or 3 sectors, or 2 or 3 groups, I should say, you can actually push the NDX up, and that was what drove it today. So that's a pretty good wrap of where we're at. What's going to happen tomorrow? Looks to me like a little bit more sideways, and then we're going to go into Friday and see how players want to position into the weekend. Right now, it's a toss-up for tomorrow. Maybe get a little bit more of a bounce. But, folks, we're on the ledge. And when you're on the ledge, the danger is that the ledge caves. This is the 3rd time down. I'm going to pull it back up here and show it to you one more time, the S&P. The key thing here is the ledge has to hold. And so what I'm talking about is I'm talking about this area here where those lows are. If you can't hold this area, right, you're in danger of expanding it to the downside. And if you expand it to the downside, that takes you back into this swing point lows low, into this big bars high. That would be the area that you'd have to think. So this is a critical area. You got to hold it. If you don't, expect this thing to break. And why? Well, you're going to break 3 swing points potentially. And if you break this one over here, you're breaking it on multiple time frames, and that can give you the juice to shoot right back down into this low. That's where we're at. That's where the risk is. That's it for tonight. Thanks for joining me. Have a great one. Take care, and I'll see you next time. Good night.